And you know, today was a very colorful day in financial markets. We're going to start off with the dollar. The dollar was down 0.5% on the week. Moving along to the Dow Jones Industrial Average, it finished down 2.2% on the week. Not bad given the fact that today, you know, was down 2.25%. So, with that said, let's take a look at the S&P and see how that did. S&P down 2.39%. Looking at the NASDAQ. The NASDAQ had a better week. No, wait, hang on a second here. God bless you. NASDAQ's not giving us the data for some bizarre reason. NASDAQ finished down exactly 2.36%, very similar to the S&P 500. So it was a rough week for equities. Let's take a look at crude oil, see how crude finished the week. And crude finished up 2.86% after a crushing week last week, down 6.72. And it also evened some of the gains. It evened some of the gains it had yesterday. Crude oil finished down today 4%. So take a look at gold. Let's take a look at gold. So gold finished up 0.3%. Nothing serious there. Take a look at natty gas. Natty gas finished the week up 0.2%. Copper only down 0.5%. We could be nearing the bottom in copper. Copper finished up 0.8% this week. Take a look at coffee. Take a look at coffee here. See how coffee did. Oh, wrong contract. KC1. Generic coffee. But we want the 2016 contract. Hold on. Coffee was flat. Coffee was flat. Let's take a look at European equities. Euro equities. We're going to put in the Euro stocks, the SX5E. There we go. Not a bad week in Europe, down only 0.8%. But a lot of the bloodbath today came after Europe was closed. So you would expect that to be a little bit worse, or very similar to inline with the U.S. The Nikkei 225 index, it finished up 0.25%. So moving along to the Shanghai Composite. Let's see how China did. Let's see how China did. China finished up almost 0.4%, but they didn't get hammered with today. Today was the first bad day since Brexit, basically. Let's look at some sovereign bonds, which is very bizarre. Usually when equity markets bleed to death like they did today, sovereign bonds usually rally, and that that just wasn't the case. So I'm going to pull up 10-year U.S. Treasury, the generic yield. It's USG, G10. So the yield actually, the yield changed. Looks like 725 bips. 720, not 725 bips. It looks like the yield changed 7.5 basis points. So let's take a look at this on a chart level. See what 5 days. See 5 days. So yeah, that was right. But you see how it was much lower during the week? And today was a really bad day. Let's see what Bloomberg's basically saying for top news. Oh, it's coming up. Wait 1 second. And as that's actually taking its time to pull up, I'm going to take a look at Apple. Apple's down 2.39 cents. Apple is having a little rough run since the announced the new phone. It always goes through the same cycle. While we're not super excited about this product cycle as we were on the last one, we still believe that they're going to sell 75 million phones, which is going to basically produce $50 billion in revenue. So you got to put it into the context. Apple is still going to make a lot of money the last 4 months of this year, and if you doubt that, you know, you're going to be proven wrong time and time again. But after the phone's announced, it usually goes into a little sideways action on the stock. The phone will come out. There'll be a lot of buzz on the days that it's getting shipped. By the way, my Apple iPhone 7 Plus is going to be sent to me on September 17th. So I got to wait 8 more days, according to the salesperson that sold it to me today, from AT&T, by the way. AT&T is trying to figure out ways to keep their customers happy and loyal and get some of the revenue to flow back through them rather than the Apple Store. So Apple's got some competition to keep consumers in the store because they know if they get you in the store, they can sell you other things like iPads and MacBook Pros and all types of different gadgets. So AT&T used to have that niche locked up, and they don't have it locked up anymore. Looking at these stories right now and what's hitting. So it's the no stimulus story. The Kool-Aid's being pulled away from the children, and the children are reacting in a negative fashion. So that seems like the gist of the conversation today. One of the things I'd like to bring to your attention is the VIX, the volatility index, which had a massive move today. Look at that. That's a serious move on the VIX. You should expect some follow through on Monday. Not a very good situation. It looks like it was up 30% just by like my PhD in 3rd grade mathematics. but it's actually a little more than that, 39%. And I'm going to show you basically the bond market. Um, the bond market, you know, here is U.S. Treasuries. Short-term stuff is getting a bid, but the longer part of the curve got basically hit. And if you look at it on this basis right here, you can see, like, that's a big move. That's a decent size. That's a big move when the yields are down this low. NASDAQ got slammed. S&P is pretty much flat. For the year, it's up slightly. Like a little bit over 1%. Yeah. We'll look at some commodities. I'll show you commodities. Just show you, it's been a bloodbath across the board today. I think this was very much long overdue, and I get scared when the market just keeps going up on bad news. It just felt like every single day things are getting more and more expensive, and the fundamentals of the market were slowing. So there was a detachment between equity prices and fundamentals, and who the hell knows what's like pushing these things up. But you have a good recap of what went on, and equities, bonds, commodities on a weekly basis. You see how the week ended. You're looking at volatility. You're looking at the bond market. I hope you take this information, think about what happened over the summer since Brexit, and put things into context of macroeconomic data that's been coming out, and the fact that equity prices, bond prices rallied on like weak information, and not to say that this can't be undone in 1 or 2 days next week, because it absolutely can. But it seems like today was curve steepening, which is actually positive for the economy. But when bonds sell and stocks sell, it's not the conventional wisdom. They usually, over long periods of time, they go in opposite directions. And I know that hasn't been the trend since the financial crisis, because central banks have been sitting there and flooding the markets with liquidity. But at a certain point, it's got to go back to the way it was prior to, all these stimulus packages. So, with that said, I hope you have a great weekend, and look forward to chatting next week. Tune in more for live analysis and update on global financial markets. Ciao.